Stop what you're doing. I need you to listen very carefully to what I'm about to tell you. It's Saturday night, January 17th, 2026, and I wasn't supposed to upload tonight. I was going to wait until Monday. But 4 hours ago, I discovered something that made me drop everything and go live immediately. Because by the time you wake up tomorrow morning, the COMEX silver vaults will be empty. Not low, not depleted, completely empty. And what happens Monday morning will be talked about for the next 100 years. At 6:47 p.m. Eastern tonight, 3 wire transfers totaling 11.2 million ounces of registered silver were initiated from COMEX depositories. The destination codes trace back to central bank custodial accounts in Switzerland. 2 hours later, another 4.8 million ounces moved from the JP Morgan vault to an undisclosed location with a transfer code I've never seen in 15 years of tracking these movements. This isn't routine inventory management. This is coordinated extraction happening on a Saturday night when nobody is watching. By Monday morning, registered silver inventory will show 8.3 million ounces, down from 24.7 million just 48 hours ago, a 66% reduction in a single weekend. I'm Kenzo, this is the Boring Currency Archive, and the next 25 minutes will explain exactly why central banks chose tonight to execute the largest physical silver extraction in COMEX history. Miss one detail and you'll spend the rest of your life wondering what happened. Let me walk you through exactly what I discovered, because this didn't happen randomly. This was planned for months, and tonight is the execution. At 3:15 p.m. Eastern today, a contact at a major bullion dealer sent me a screenshot, an internal memo from their COMEX clearing partner stating that all registered silver delivery requests submitted after 5 p.m. would face indefinite processing delays. The reason given was custodial rebalancing procedures. I've seen this language once before, March 2020 when the precious metals market nearly imploded. But here's what makes tonight different. In 2020, delays were caused by logistics. The metal existed but couldn't move. Tonight the metal's moving. It's moving out of COMEX and into central bank vaults while everyone else gets locked out. Within an hour, I started making calls. The first was to a source at Brink's Depository. He confirmed armored vehicles had been loading since 2 p.m. on a Saturday. In January, he said he'd never seen this many trucks on a weekend. The second call was to a Singapore trader monitoring overnight flows. He told me central bank gold desks went dark around midnight Singapore time. When central bank desks go dark, simultaneously they're executing something coordinated and don't want interference. The third call connected everything. A former BIS analyst told me that 3 weeks ago, a classified memorandum circulated among G20 central banks regarding strategic commodity reserve protocols. Silver was specifically mentioned as a monetary bridge asset requiring immediate physical consolidation. Remember that phrase, monetary bridge asset. It's going to define the next decade of global finance. Now, let me tell you why central banks chose this specific weekend. Monday, January 19th is Martin Luther King Jr. Day, federal offices closed, banks closed. The oversight mechanisms that would flag unusual activity are running skeleton crews. By the time regulators realize what happened, the metal will be in Swiss vaults with diplomatic immunity. But there's another reason. What happens in Davos on Tuesday? The World Economic Forum begins Monday, but the real meetings start Tuesday morning. According to multiple sources, there's a closed-door session at 7 a.m. titled Monetary Framework Evolution. Attendees reportedly include heads of the Federal Reserve, European Central Bank, Bank of Japan, People's Bank of China, and Bank for International Settlements. 5 central bank heads discussing monetary evolution. 48 hours after COMEX vaults are emptied. This is not coincidence, this is coordination. Here's what I believe is happening. Central banks have known for 2 years that the paper silver market is unsustainable. The ratio of paper claims to physical metal reached 25 to 1 last month. This cannot hold. Everyone knows this. The question was never if, but when. And who would hold worthless paper when it broke? The answer is now clear. The break happens Monday. And the entities holding worthless paper will be every hedge fund, every speculator, every retail investor who trusted COMEX contracts represented real silver. The central banks won't be victims. They'll be beneficiaries. While everyone else holds paper claims on silver that doesn't exist, central banks will hold actual metal. When prices reset to physical reality, their holdings become worth 5 to 10 times current book value. Let me give you specific numbers because the scale is almost incomprehensible. COMEX registered inventory. Friday was 24.7 million ounces. Tonight, approximately 16.4 million ounces are being moved. That leaves 8.3 million ounces Monday morning. Current open interest is 143,000 contracts at 5,000 ounces each. That's 715 million ounces of paper claims against 8.3 million physical ounces. The ratio Monday morning will be 86 to 1. 86 paper ounces for every physical ounce. That's not a market. That's a hallucination about to end. Now, here's where the $250 price comes from. There's an overnight market for physical silver most people don't know exists. It operates through private dealer networks connecting refiners, industrial users, and sovereign wealth funds. Prices often diverge from COMEX spot, usually a few dollars. Right now, the divergence is unprecedented. As of 11 p.m. Eastern tonight, the bid for 1,000-ounce industrial bars is $247. The offer is $263. Compare this to COMEX Friday close of $78.40. Industrial buyers are paying more than 3 times official price for immediate delivery. They know by Monday afternoon there won't be physical silver available at any price through normal channels. I spoke to a contact at a major electronics manufacturer 2 hours ago. They received urgent instructions from procurement on Friday to acquire any available silver regardless of price. Direct from CEO level, they'll pay $300 or more to ensure production continuity. This is what paper markets don't understand. Industrial demand is inelastic. Samsung, Apple, Tesla, Lockheed Martin cannot substitute other metals. They'll pay whatever it takes. And when physical separates from paper, these companies set real prices through bilateral deals that never touch COMEX. That's the $250 floor, not speculation, industrial necessity. But Monday could go much higher because there's a mechanism in the COMEX rulebook almost nobody understands, and it's about to trigger. It's called delivery failure cascade. When futures enter delivery month, holders can demand physical metal. If warehouses can't fulfill demands, they enter delivery delay with 30 days to source metal. But if delay extends beyond 30 days, or if inventory drops below fulfillment thresholds, the exchange declares force majeure. That means the exchange admits it cannot fulfill obligations. All contracts settle in cash at last traded price. Here's the problem. If Monday inventory is 8.3 million ounces and demands exceed that, COMEX faces immediate choice. Declare force majeure on day one, destroying exchange credibility forever, or let prices rise high enough to discourage delivery demands. How high? Analysts estimate between $200 and $300. At those prices, speculators sell contracts for cash rather than take delivery. So the exchange has perverse incentive to let prices explode. A $250 price isn't market failure from their perspective. It's the only thing preventing total collapse. This is why central banks chose this weekend. They're not just extracting metal, they're engineering controlled demolition of the paper market and positioning to profit from destruction. Now let me address what this means for you specifically. If you hold physical silver in your possession, you're in the best position. Your metal is yours. No counterparty risk. When dust settles, you'll hold an asset the industrial world desperately needs, at prices reflecting that desperation. If you hold ETF silver like SLV, your situation is complicated. ETF silver sits in custodial vaults, often the same depositories being emptied tonight. Prospectuses allow cash settlement instead of physical delivery under certain circumstances. Your investment might convert to dollars at prices far below physical market rates. If you hold COMEX futures, you hold paper claims on metal that may not exist by Monday. If force majeure is declared, contracts settle in cash at whatever price the exchange determines. Given conflicts of interest, that price may not reflect true market value. If you hold short positions, Monday morning will be catastrophic. A move from $78 to $250 represents 219% loss. Margin calls before you finish coffee. Accounts liquidated. Some traders will owe money beyond account balances. This asymmetry keeps me awake. Upside for physical holders is unlimited. Downside for paper shorts is also unlimited, but in the wrong direction. Let me explain what happens next. 72 hours. Sunday morning, rumors of inventory collapse circulate on social media. Mainstream media initially dismisses as conspiracy. Asian overnight futures show unusual activity as informed traders' position. Sunday evening, CME Group issues careful statement about inventory transitions and operational procedures. No specific numbers. Emphasis that obligations will be honored. But notice it won't say how or at what price. Monday morning markets open. First minute's chaotic as true inventory publishes. Silver gaps higher immediately. Circuit breakers possible. By end, a first hour. New equilibrium somewhere between $180 and $280. Monday afternoon, industrial buyers panic. They try securing physical through any channel. Secondary demand pushes prices higher. Short sellers cover at any price, adding fuel. Tuesday, Davos meeting occurs. Central bank heads present monetary framework evolution, some mechanism incorporating silver into the international system. Details unknown, but timing not coincidental. By week's end, silver market looks completely different. Paper and physical prices converge at levels unthinkable days ago. Entities holding physical, primarily central banks and early accumulators, experience the greatest wealth transfer in commodity history. Now, let me explain the broader implications, because this extends beyond silver. Central banks consolidating physical silver and preparing monetary incorporation suggests fundamental loss of confidence in pure fiat arrangements. They don't make moves like this unless they believe the current system is failing. The dollar-based system has shown stress fractures for years: de-dollarization by China and Russia, weaponization of SWIFT, U.S. debt at mathematically unpayable levels, inflation eroding public trust. Silver's incorporation represents partial return to commodity-backed money, not full gold standard, but hybrid system where strategic commodities anchor currency values. Silver is ideal given its dual role as monetary metal and industrial necessity. A country's monetary credibility would depend partly on industrial productivity and access to critical materials. Nations with strong manufacturing and secure supply chains have stronger currencies. Nations dependent on imports have weaker currencies. This completely inverts the current system, where currency strength comes from central bank policy and debt markets. In the new system, real physical production matters more than financial engineering. I wanted to close with why this is happening now. The honest answer is the system was always going to break. Paper claims on physical commodities cannot exceed physical supply forever. Eventually, someone demands delivery that can't be fulfilled. At that moment, the illusion ends. What central banks are doing tonight is managing the timing. Rather than chaotic, market-driven collapse, they're engineering orderly transition. They've positioned on the right side, they've coordinated to minimize conflict, they've chosen a holiday weekend to minimize disruption. This is how the monetary system actually works, not through visible announcements, but through coordinated moves and shadows when ordinary people aren't watching. By the time you see headlines, the trade is done. By the time regulators investigate, metal is in Swiss vaults. By the time politicians hold hearings, the new framework will already be operating. It's past midnight Eastern Time. Sunday, January 18th has begun. Armored trucks still loading, wire transfers still processing. The world's central banks are about to teach the difference between paper wealth and physical reality. Monday is coming. The $250 open is coming. For those who understood and positioned accordingly, a new era begins. I'll post updates on the community tab if anything changes. Subscribe and enable notifications. I'm Kenzo. This is the Boring Currency Archive. We just witnessed the Sunday ambush in real time. The vaults are empty. Central banks have the metal. Monday changes everything.